the government actually rewards home ownership. In this video, I'm going to be talking about how they do that and what effect this has on you, a potential homeowner and home buyer, especially here in Arizona. Before we get started, my name is Michael Zarch. I'm a 22-year-old realtor in Arizona, the East Valley area, and I'm here to educate people and guide people through the process of owning properties in Arizona and building financial freedom. Okay, so most people think that buying a home is just a lifestyle decision, but in reality, it is one of the most incentivized financial decisions you can make. And I'm not here to tell you, how to buy or when to buy, tomorrow. But I do want to explain how home ownership is. So the government actually rewards home ownership, especially here in Arizona. In this video, I'm going to be talking about how the government does that, why they do that, and how this can affect you in potentially being a new home buyer and home owner in Arizona. So most people think that buying a home is just a personal decision. But what most people don't realize is that the system rewards this and is designed to reward ownership. Again, I'm not trying to tell people to buy right now. This is about understanding why home ownership has been an incentive for decades and what this can mean for you. After all, it's not like I've been paying taxes forever. I don't want this to be a tax code video or advise you on financial decisions. I'm just a 22-year-old realtor, and my goal is to help as many people as possible build wealth and financial freedom through the vehicle of real estate. If you're new to this channel, my name is Michael Zarch, and let's get right into the video. So the first question here is why the government does this. So the government wants to create stable communities in each area. They want people who own properties and own homes more likely to stay longer, invest locally, fundraise their schools and infrastructure, and pay and vote in elections. They want to build properties here. It just has much more civil order when people own properties, and that's why the government likes that. Okay, so the first reason why the government rewards home ownership is going to be mortgage interest deduction for taxes. So mortgage interest can be deducted within limits. So it can be up to $750,000 or up to $375,000 if married and filed separately. These can be on your primary or secondary residences, and they're most valuable on the start of the loan. That's because you pay most of the interest, so you can deduct those taxes. This is really, really big for high earners here in Arizona. And again, what I want you to focus on here is that this reduces the effective costs of owning homes. Because you're owning homes, the government rewards you on paying less taxes, which means you keep more money just because you're owning property with all the other added benefits to this. And a big key factor to note here is that rent does not offer any sort of deduction because you're not owning anything. It really has no benefits towards renting a home, unless, of course, you can't afford to own a home at this given moment. And another key framing that I want you guys to keep in mind here is that the system reduces your tax burden on owning related to paying debt just for housing. This is very, very intentional, and I think it's very important to understand that the more things you own, and taxes are inevitable. I mean, you're going to have to pay taxes eventually. The more you can deduct taxes on, especially, interest on debt, really the only asset class that allows that is owning homes. That's going to be a huge advantage for you when you're on that path and in pursuit of financial freedom. So number 2 is called capital gains exemptions. So this is very, very important. So if you sell your primary residence, you can get exempt up to $250,000 and $500,000 when married. But you must have lived in this property 2 out of the last 5 years. It does not need to be 2 consecutive years. It just needs to be 2 years out of the last 5 years. This is massive. This is a huge advantage homeowners have. No other mainstream asset class allows you to, get this level of tax-free appreciation. A good thing to note about this is you can only do this once every 2 years, but again, doing it once you sell a property is massive. The benefits that you reap of just owning a property, and then once you get into that ownership level and get into the game. Next up, we're going to talk about inflation protection. So inflation, everyone knows what inflation is. Everyone talks about inflation as far as, the local or the normal commodities like groceries, gas. But inflation can possibly work in your favor when you own homes. So as inflations tend to rise, right, as what we all know and hear about, that means that your rents can raise. And a lot of people are probably coming to me like, well, Michael, inflation is going to raise your housing. But no, when you own a home and you're paying your mortgage on a fixed housing rate, that rate is fixed. It doesn't go up with inflation. But what can go up is the rents. So rents will go up with inflation, which means that the rents you're charging to your tenants, you're going to make more money because of inflation. That's a key advantage of inflation that people don't realize and think it's just bad when the groceries and on the gas and all that stuff raises in inflation. So that's something to keep in mind as well. The next incentive that I want to talk about, you've probably heard of it before. It's called depreciation. I'm going to go over a few things very briefly here with what depreciation is. But to start, so depreciation can only be used on an investment property. It can't be your primary residence. But depreciation is losing value, your property losing value on the wear and tears of your house, but it's actually, still gaining value through appreciation. So while you may think on paper it's losing value, in real life your property is appreciating in value. And this is important with the wear and tear, which makes your property lose value, is that you can write those offs in taxes. The IRS is responsible for this and allowing their owners to deduct the taxes or the write-offs for the wear and tear. This is one of the the reasons why investors like real estate. It just comes with a bunch of different rules, and they're not loopholes because it's completely legal, but just different tax benefits that other asset classes and investing do not offer. The next investment that I want to slightly touch on is called the 1031 like-kind exchange. So it goes like this. After you bought your investment property, you go out and you sell the property. Once you sell the property, you're not going to be taxed on the profit and the gains you get from selling that property. So because you've invested in a real estate property and then you decided to sell it after you gained so much value and appreciation, and you sell it for double the amount, the profit that you make is not going to get taxed from the 1031 exchange. But the rule here is that you have to invest in another real estate property within 45 days. So essentially what this does for investors is that as long as you stay investing in different real estate, you can keep the profit and gains and defer the taxes to a later time. This is very, very huge for investors and strategy, and when you want to, profit off of investing in real estate. I want to say that this is only for investment properties only. It can't be for primary residences, but definitely another tool in the bag and benefit that investors love to keep in their back pocket. The most popular one, the one that I preach all the time, is leverage. So this is just financing using you can control a $400,000 investment using only 3.5% of your down payment with an FHA loan. This is a huge reason why real estate is one of the most leveraged and wide-ranged asset class to invest in. I mean, think about it. You can invest in a property that you would never afford, but just a small amount of money. It's unbelievable the ways you can do this. Obviously, invest smart, leverage smart to make sure it's the right property. But I've already talked about this in many of my videos. Leverage is the gold mine, the key to building wealth in real estate. It's something that I didn't know a long time ago. I thought, when I was little, that when I own a property, when I want to buy my future property, I want to just pay it in cash. I want to be rich enough to pay it in cash. Absolutely not. That is not the strategy you want to do. You want to take. It's all about leveraging, money. So even if you can afford a property straight out of cash, if you're lucky enough to afford that, why would you? What you should do is diversify your real estate portfolio by instead of buying one property in cash, buy multiple properties, 2 or 3 properties, and leverage the finance for that. And then, the interest rates and then the inflation can help you, and the tax deductions help you, the tax write-offs. It's unbelievable, the tools that you get from owning real estate. Lastly, I want to reiterate that renting isn't wrong, but it's just important to understand what renting does not provide compared to owning homes. When you're renting, you're paying someone else's mortgage. You could be, if you decide to own a home, you could definitely be the one, collecting the rent and getting that mortgage paid for you. Renting is expense only, while owning homes is expenses plus incentives plus gaining equity and building a large portfolio of owning. I've rented before. My family's rented a lot before, but so it's completely not. It's necessary when you have to rent, but if you're in position and you have the ability and potentially buy a home and create ownership, which is on the path of financial freedom, you may be closer than you think, especially with all the buyer programs available to you, and then the incentives that are available to you. And there's so much more details with the incentives and the ways that real estate multiplies wealth. I've talked about it in a different video. If you're interested in learning more about your situation and how this may help you and how close you are to owning property, even if it's a year or 2 years away, or you're a young student or just post-grad and you're not really educated yet, reach out to me. I can help you out much more, just set you on the right path, and really build a plan so that when the time comes for you to build ownership and create wealth, you're ready, you're educated, and you have the right mindset and the right habits to go ahead and do that for yourself. I want everyone to build wealth, to have a large portfolio, and what I've been researching and learning and educating myself on is that real estate is the vehicle. Why the rich get wealthy? It's because they put their money in these properties, and these properties end up making money for them. Definitely diversify your money, so stocks, all that. I'm not against any of that, like the other ways of building money, but real estate can be a huge tool and a huge way for you to gain ownership, and you might be closer than you think. Anyways, if you like this video, like, comment, and subscribe. I break down a lot about real estate investing, creating habits, mindsets, building systems that can help you be successful, and just focus on the things that you want to focus and build financial freedom. We all get to choose in this life what we want to do with it, and I think educating yourself and building something worthwhile and something that your kids would like to see is very, very important. I also post a lot about fitness and faith as well, so if you enjoy those topics, check out my other videos. But thank you for watching.